Hi guys. Today we will analyze Medtronic stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock has been an average performer in the overall market. The short-term trend is neutral, while the long-term trend is still negative. We need to see a little more continued positive action to make this really interesting. Strong support level is around $99.50. Next strong support level is around $88.50. Strong resistance levels are around $110 and $113. Next strong resistance levels are around $120 and $132. In the last month the stock has been trading between $99 and $114 range. It is currently trading in the middle of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 5.2 million. This is a good sign as it is always nice to have a liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model. Discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 2% per year, for last 5 years. We see that the average profit margin of the stock has been around 14% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 130% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Medtronic company: bad, average, and good. First scenario. Medtronic will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 4%. Future profit margin would be low, 12%. Future free cash flow to net income rate would be low, 90%. In this case, the fair value of the stock today would be $81. Second scenario. Medtronic will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 5%. Future profit margin would be average, 13%. Future free cash flow to net income rate would be average, 95%. In this case, the fair value of the stock today would be $95. Third scenario. Medtronic will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 6%. Future profit margin would be high, 14%. Future free cash flow to net income rate would be high, 100%. In this case, the fair value of the stock today would be $112. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 3.63. Minimum rate of return. I will use 10%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Medtronic, analysts forecast growth rate around 6% per year in next 5 years, and future P/E around 19. Again, I will use 3 different scenarios for Medtronic company: bad, average, and good. First scenario. Medtronic will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 4%. Future P/E would be low, 20. In this case, the fair value of the stock today would be $44. Second scenario. Medtronic will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 5%. Future PE would be average, 22. In this case, the fair value of the stock today would be $53. Third scenario. Medtronic will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 6%. Future PE would be high, 24. In this case, the fair value of the stock today would be $62. As you can see, today the stock is overvalued, $106, even if we expect the company's high performance in future. Medtronic has a good profitability rating, but there are some minor concerns on its financial health. The company is expected to show a small growth in the next 5 years, so, I wish the stock would be cheaper. I don't have plans to buy the stock at these levels. Keep in mind that Medtronic is an Irish company for tax purposes, 15% dividend tax withholding. Is the juice worth the squeeze at these levels? Do your due diligence, and consult with your CPA. Company's strengths. Medtronic is the world's largest medical device company. Its devices focus on cardiac rhythm management, spinal and surgical navigation technologies, treatments for diabetes and neurological conditions, vascular therapies, and cardiac surgery. Medtronic has an impressive pipeline, which continues to pump out new medical devices to market. The company has a strong track record of successful mergers and acquisitions, investments, and strategic partnerships. Medtronic is using its ample operating cash flow to support product launches and new product development, and to make acquisitions. The company is a dividend aristocrat. The company has increased its dividend for 44 years in a row. It has a yearly dividend yield of 2.37%. The dividend is growing with an annual growth rate of 8%. Medtronic has a return on assets of 5% and profit margin of 15%. This is amongst the best returns in the industry. Medtronic has a return on equity of 9.4%. This is comparable to the industry average of 8.6%. Risks. The company faces integration risks from acquisitions. It also faces competitive risks, as it seeks to protect its market share lead from rivals that are expanding their sales forces and product offerings. Medtronic's devices are indirectly subject to Medicare reimbursement rates. Increasing pressure on payments could hurt profitability. Over the years, Medtronic has issued a number of voluntary recalls of some of its products. Although the fatalities associated with these problems have been few, recalls generally require time and effort, and potentially, legal settlements. Medtronic is an Irish company for tax purposes, 15% dividend tax withholding if you don't file with your broker. Based on estimates for the next 5 years, Medtronic will show a small growth in revenue. The revenue will grow by 5 to 7% on average per year. The company is expected to show a small growth in earnings per share. In the coming 5 years, the EPS will grow by 10 to 12% yearly. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.